Majid Jafar joins us, the CEO of Crescent Petroleum. Majid, nice to see you again. We had you up on the stand in Davos, so we should just point that out to the audience. Here we are trying to just come to terms with what instability in North Africa potentially means for energy prices, and to be quite frank, doesn't seem to have had very much impact on the barrel of oil price.
Yeah, I think that the general sense of instability post-Arab Spring is already factored in, probably, to the oil pricing currently. But the impact on the industry has been significant from this incident. It's added a security dimension to what was already a political turbulence.
So there's additional costs, but it doesn't in any way slow drilling, exploration, continued extraction processes. No impact.
Well, I think it's more than additional costs. I mean, it may well make some players reconsider not only their investment but their presence in the region. Having said that, 60% of the world's oil and 40% of the world's gas reserves are in the Middle East, North Africa region. There's no doubt going forward it's going to continue to be a major source of supply, and energy is the lifeblood of the world economy, which is where we as regional players feel perhaps better placed to manage these risks and take advantage of some of the opportunities that may arise.
I mean, it seems in all reality that it's what's going on in North America with shale gas that's causing the biggest rethink in how energy businesses allocate their capital at the moment. That's a real challenge now to getting IOCs put new investment into the Middle East region, isn't it? Because they're going to have another look at North America first.
Certainly the rise of unconventionals has had a big impact, and I think will continue. Having said that, in terms of costs of production and scale of the reserves that are readily available, countries in the region, particularly Iraq, where we've invested close to $1 billion and currently producing 80,000 BOE per day, barrels of oil equivalent, in the Kurdistan region, are going to be major suppliers for both oil and gas. Certainly unconventionals from the US is a challenge or potential threat to the Middle East. An even bigger one, I would say, is the energy inefficiency and the rise of demand and consumption within the Middle East region itself. And the two of those are perhaps putting a risk on long-term export revenues for some of the countries in the region.
What happens to the business case if crude falls from the current record high levels that we saw in 2012 to $80 a barrel, for instance?
Well, it's interesting that you know, $80 a barrel would be seen as a collapse these days. I remember when we were screening projects at $6 a barrel, not so, you know, in the late 90s. I mean, taking into account the global economic downturn, the fact that we're still seeing actually probably the most stable period in oil prices over the last couple of years, and it hasn't really seemed, it's not being talked about as one of the big causes for lackluster recovery. And indeed some economies, China, seem to be growing quite well despite those high oil prices. So actually stability is the more important factor for both producers and consumers, and most companies and governments in the Middle East region are budgeting on around the $80 level in any case.
It's interesting you should mention the word stability, because I was told that the social instability that could occur if we see sub $90 a barrel, certainly in a lot of these Middle Eastern places and places such as Iraq, where I don't think we can negate the cost of security and protection of the infrastructure as well. I was told that actually these guys can't afford to get this stuff out of the ground at $80 a barrel now without risking threats to their social programs.
It's not really the cost of production, Steve. It's more the government budgets that have grown in the last few years. Although most of them still budgeting on around $80 a barrel. But I agree, it's unsustainable. The growth in government spending is unsustainable. In Iraq's case, though, it's more a sense of the mismanagement. The revenues have been huge. They spent $500 billion in the last 5 years. Unfortunately, not much to show for it on the ground in southern Iraq, where there's still a lack of electricity, security. In the north of the Kurdistan region, where we're very invested, it's a different story.
Sure. Okay, come in, please.
Yeah, I'm interested to hear your opinion about the oil price and actually the stability. It's interesting to hear you use that word, because actually the oil price has been remarkably stable, I think, over the last year in particular, and longer. Last year we had this one brief sort of dip in terms of Brent, and that we've been sitting around this 110 level. And I'm just wondering what that's telling us. Does it mean that supply and demand is really in quite good balance at the moment? Demand's been depressed perhaps a little bit, or suppressed from China and so on, and we've had shale gas coming out. But what is it telling us? Because I look at it as an investor, I listen to the oil price. What's it telling me about the global macro outlook at the moment?
Well, I think there is a bit of a risk premium factored in, and that actually kicked in 2011 when the Arab Spring started. It was interesting that the market didn't seem to react much to short-term stories about the Straits of Hormuz, tensions in Iran, or indeed this recent security incident in Algeria. But the overall revolutions that kicked off, especially in Egypt in early 2011, exactly 2 years ago, that's what sent oil prices up from around 80 to around 110, which is where they've been since. And that seems to have been factored in, and as you mentioned, it's been stable since then.
Majid, good to see you. Thanks very much for dropping in. Majid Jafar, CEO of Crescent Petroleum Markets.